Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 30th of November and our guest today, as our regular guest, is David Kuo, founder of the Smart Investor, coming out to us out of Singapore. Now, David, it's always lovely to have you on the show. Selamat tengah hari.
Selamat tengah hari, Brian.
Now, David, before we check the numbers or get your insights, we're going to check the numbers across the region. We start with, of course, where you're at the SGX. The Straits Times Index is down 0.35%. We've got then Bursa Malaysia, which is down 0.06%. But we've got green across the region. Otherwise, we've got Shanghai, which is up 0.2%. ASX or Ordinaries is up 0.48%. The Nikkei is up 0.22%. The Hang Seng is up 0.1%. Rounding up the numbers, we've got the Kospi, which is up 0.06%. So, David, what's your view of market performance in the first half of the day?
Well, it's pretty much a flat line, isn't it? Not an awful lot is going on a Thursday afternoon. But having said that, the American futures are indicating that the market could open higher over in America. As long as that is sustained, I think that maybe later on this afternoon, we could actually see some action in the Asian markets, and we could see some follow through tomorrow. But you know me, I hate making predictions about what's going to happen because generally I end up with egg on my face. But I think flatline today because America flatline. So unless something changes in America, I think we could close a little bit higher today, Brian.
Now, David, I want to take a stab at what markets are expecting in terms of rate cuts. Now, is the market correct to expect the Fed to cut rates in the next few months? That's the general consensus right now.
Well, this is really confusing because we've had a couple of Federal Reserve governors, and these are the people who sit on the rate setting committee over in America. One of them reckons that, yeah, interest rates have more or less peaked at the moment, and that the next move in interest rates could be downwards. So everybody latched onto that and said, yeah, interest rates are going to get cut within the next few months over in America. And that is what has been driving the American markets and also driving the bond markets, because people want to lock in on those higher interest rates at the moment because they think that interest rates are going to be cut. So if you have an opportunity to lock in on those higher rates at around sort of 4%, if not a little bit higher, then why wouldn't you want to do so? Then we have another Federal Reserve governor who came out and said that, I think that interest rates are going to actually sort of move higher. I don't think we're actually near the end there. Nobody paid any attention to what this governor had to say. Nobody wanted to hear the bad news that interest rates were going to go up further. And so we have this push and pull in the market. And I think we're going to get this push and pull until something concrete happens. And it's not entirely surprising because people are squealing at the moment from those higher interest rates. Having said that, the American economy seems to be doing okay. I mean, the latest GDP figures seem to suggest that the American economy is still growing. And there are plenty of investments going into America. And that is what has been driving the economic growth in America. But if the economy is going strong and interest rates are where it is at the moment, why would the Federal Reserve need to cut interest rates? Why would they want to pour fuel onto the fire and sort of make that American economy grow even faster than it is? Because that is when you're going to end up with inflation again. So people have to make up their own minds about what is going on. The thing I do want to point out is that the big danger in America isn't the consumer prices inflation. And we'll be getting these figures, these CPE data coming out, which is the Federal Reserve's preferred measure of inflation. We'll be getting these figures coming out, and that'll give us a clearer picture as to what is happening in terms of consumer prices inflation in America. But again, we seem to be missing the point. What about asset price inflation? What about inflation that is going on in terms of driving the stock market high? You may not, well, I'm sure you have noticed this, Brian, but the American stock market is within touching distance of its all-time high.
Exactly.
Yeah. I mean, it's only about less than what? About 0.5%. beyond its all-time high. The Dow only has to climb another 400 or 500 points, which it can easily do so, and it will have reached its all-time high. And all those people that thought, oh, let's not go into the market because, oh, America's going to go into recession. And they've actually sort of been wrong-footed because the American market is actually sort of doing extremely well. So we're going to see bond prices higher. We're going to see stock market indices higher. We may even actually start to see asset price inflation in terms of house prices. So I don't think the Federal Reserve is going to be that keen to cut interest rates because the last thing it wants to do is to actually drive up asset prices again, Brian.
Now, David, on a different note, we move to China with something that's really, really interesting. Now, China's investment bank, the China International Capital Corporation, has told its analysts to stop issuing bearish research on the Chinese economy. Now, are they right to ignore the negatives and promote the positives?
Oh, this is a really tough one. I mean, we're actually going from one extreme to the other. We're going from America that is doing exceedingly well. And of course, if we just turn back to America at the moment, the Federal Reserve is telling everybody, look, don't jump the gun. Don't think that we're going to be cutting interest rates because we're not. But the market says, yes, you are going to be cutting interest rates. So don't tell us you're not going to do that. Over in China, they have a completely different problem. We've had manufacturing data out today, which seems to suggest that the Chinese economy is struggling really badly. And at the same time, the authorities in China, the Chinese Communist Party, wants to paint this picture that China is actually sort of doing okay, and they don't want to hear about anything that is bad that is happening in China. So on the one hand, you have America, which is an open economy, and people can say whatever they want, and that people can make up their own minds as to what is going on. Over in China, they want to control the narrative in some way. And even with a corporation, one of the biggest investment banks in China, CICC, they have analysts. And if I was working on the team, which I'm not, over in China, and I don't think things are going that well, don't I have a responsibility to tell people, don't pile into the stock market at the moment because things aren't going that well in China. It's going to take a while before things start to stabilize in China. And maybe China needs a lot more stimulus in order to get its economy growing again. So we have this difficulty. And which one do you prefer? Do you prefer the one in America where you have no control over what anyone says and people can make up their own minds? And in my case, I look at America and I go, yeah, you know, things are looking okay over there, but valuations are very expensive. And really, you shouldn't be going into the market. Over in China, you have people say, pile into the stock market because things are absolutely fine over there. So I think the simple answer is you've got to make up your own minds, right? You've got to do your own research. And if you think that China is a good place to be at the moment, if you think that Chinese equities look attractive over the long term, then I think we should do so, which is something, you know, that you talked about recently, and everybody knows, Charlie Munger passed away. It is really sad. And what he really said was, you have to look at the long term. And one phrase that he managed to convince Warren Buffett about was, you want to buy a wonderful company at a fair price, not a fair company at a wonderful price. And that is something that I drum into myself all the time when I look at businesses. I just think, is this a wonderful company that is being sold at a fair price? Or is it just a mediocre, fair company that looks exceedingly cheap at the moment? And I think I would always lean towards the former rather than the latter, Brian.
Wonderful company at a fair price. I think that's the thought that we leave the audience with today. David, thank you very much for your insights and thank you for coming on the show.
Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.